Solved problems. 12-column worksheet and adjusting journal. Problem. Prepare a 12-column worksheet and adjusting journal for the period ending December 31. Cash 50,000. Debit. Accounts receivable 340,000. Debit. Allowance for bad debts 20,000. Credit. Notes receivable 99,000. Debit. Merchandise inventory 250,000. Debit. Prepaid insurance 58,800. Debit. Prepaid rent 62,000. Debit. Office supplies 59,900. Debit. Office equipment 200,000. Debit. Accumulated depreciation office equipment 10,000. Credit. Stores equipment 250,000. Debit. Accumulated depreciation stores equipment 15,000. Credit. Furniture and fixtures 100,000. Debit. Accumulated depreciation furniture and fixtures 5,000. Credit. Delivery equipment 300,000. Debit. Accumulated depreciation delivery equipment 20,000. Credit. Accounts payable 200,000. Credit. Notes payable 50,000. Credit. Marsagana capital dash. We will find out this at the end with the balancing amount. Mr. Sagana personal 50,000. Sales 1,057,000. Sales returns and allowances 7,000. Sales discounts 8,000. Purchases 590,000. Debit. Purchase returns and allowances 2,000. Credit. Purchase discounts 3,000. Credit. Rent expense 120,000. Debit. Salaries and wages 160,000. Debit. Miscellaneous expenses 32,500. Debit. Interest income 2,900. Credit. Interest expense 2,500. Debit. Adjustment data 1. The allowance for bad debts should be increased to 10% of accounts receivable. 2. The note from the customer is a 60-day 6% note dated December 16. 3. The prepaid insurance is a 1-year fire insurance policy taken on October 1. 4. The prepaid rent is an advance payment for 4 months paid on December 1. 5. The office supplies balance only 19,900 remained on hand. 6. Properties and equipment are depreciated at 10% per annum. 7. The note issued to a supplier is a 60-day 6% note dated December 1. 8. Unpaid utilities for the month. Electricity 20,000. Water 6,000. Telephone 3,000. Unsold merchandise 200,000. Solution. 12-column worksheet. Trial balance. Debit credit. Account titles. All debits and credits are posted as given in the problem, and the Marsagan capital comes to 1,351,800. This is balancing figure. Total debits 27,36,700, and when we balance there is a difference of 1,351,800 short in the credits. So this measures Sargana's capital. Adjustments. Debit credit. Allowance for bad debts 14,000. Credit. Interest on notes receivable 247,050. Debit. Merchandise inventory 31st asset 200,000. Debit. Prepaid insurance 13,950. Credit. Prepaid rent 15,500. Credit. Office supplies 40,000. Credit. Accumulated depreciation office equipment 20,000. Credit. Accumulated depreciation stores equipment 25,000. Credit. Accumulated depreciation furniture and fixtures 10,000. Credit. Accumulated depreciation delivery equipment 30,000. Credit. Interest on notes payable 250. Credit. Accrued electricity expenses 20,000. Credit. Accrued water expense 6,000. Credit. Accrued telephone 3,000. Credit. Merchandise inventory 30th December trading 200,000. Credit. Interest on notes receivable income 247.50. Rent expense 15,500. Debit. Bad debts 14,000. Debit. Insurance expense 13,950. Debit. Office supplies expense 40,000. Debit. Depreciation office equipment 20,000. Debit. Depreciation stores equipment 20,000. Debit. Depreciation fixtures and furniture 10,000 debit. Depreciation on delivery equipment 30,000 debit. Interest on notes payable expense 250 debit. Electricity expenses 20,000 debit. Water expenses 6,000 debit. Telephone expenses 3,000 debit. Total debits of adjustments 397,947.50. Total credits of adjustments 397,947.50. Adjusted trial balance cash 50,000 debit. Accounts receivable 340,000 debit. Allowance for bad debts 34,000 credit. Notes receivable 99,000 debit. Interest on notes receivable 247.50 debit. Merchandise inventory 31st December 200,000 debit. Prepaid insurance 41,850 debit. Prepaid rent 46,500 debit. Office supplies 19,900 debit. Office equipment 200,000 debit. Accumulated depreciation office equipment 30,000 credit. Stores equipment 250,000 debit. Accumulated depreciation stores equipment 40,000 credit. Furniture and fixtures 100,000 debit. Accumulated depreciation furniture and fixtures 15,000 credit. Delivery equipment 300,000 debit. Accumulated depreciation delivery equipment 50,000 credit. Accounts payable 200,000 credit. Notes payable 50,000 credit. Interest on notes payable 250 credit. Accrued electricity expenses 20,000 credit. Accrued water expenses 6,000 credit. Accrued telephone expense 3,000 credit. Marsagana capital 1,351,800. Marsagana personal 50,000 debit. Income summary loss we will work out later on. Sales 1,57,000 credit. Sales return and allowances 7,000 debit. Sales discounts 8,000 debit. Merchandise inventory 31st December 200,000 credit. Interest on notes receivable income 247.50 credit. Merchandise inventory January 1 250,000 debit. Purchases 590,000 debit. Purchase return and allowances 2,000 credit. Purchase discounts 3,000 credit. Rent expense 135,500 debit. Salaries and wages 160,000 debit. Miscellaneous expenses 32,500 debit. Interest income 2,900 credit. Interest expense 2,500 debit. Bad debts 14,000 debit. Insurance expense 13,950 debit. Office supplies expense 40,000 debit. Depreciation office equipment 20,000 debit. Depreciation stores equipment 20,000 debit. Depreciation furniture and fixtures 10,000 debit. Depreciation delivery equipment 30,000 debit. Interest on notes payable expense 250 debit. Electricity expenses 20,000 debit. Water expenses 6,000 debit. Telephone expenses 3,000 debit. Total debits 3,65,197.50. Total credits 3,65,197.50. Income statement. Sales 1,57,000 credit. Sales returns and allowances 7,000 debit. Sales discounts 8,000 debit. Merchandise inventory December 31 200,000 credit. Interest on notes receivable income 247.50 credit. Merchandise inventory January 1 250,000 debit. Purchases 590,000 debit. Purchase returns and allowances 2,000 credit. Purchase discounts 3,000 credit. Rent expense 135,500 Salaries and wages 160,000 debit. Miscellaneous expense 32,500 debit. Interest income 2,900 credit. Interest expense 2,500 debit. Bad debts 14,000 debit. Insurance expense 13,950 debit. Office supplies expense 40,000 debit. Depreciation office equipment 20,000 debit. Depreciation stores equipment 25,000 debit. Depreciation furniture fixtures 10,000 debit. Depreciation delivery equipment 30,000 debit. Interest on notes payable expense 250 debit. Electricity expenses 20,000 debit. Water expenses 6,000 debit. Telephone expenses 3,000 debit. And income summary loss 102,552.50. Total debits 1,367,700. Total credits 1,367,700. Owner's equity Marsagna capital 1,351,800. Marsagna draw personal 50,000 debit. Income summary loss 102,552.50. Owner's equity 1,199,247.50. Balance sheet cash debit 50,000. Accounts receivable debit 340,000. Allowance for bad debts 34,000 credit. Notes receivable 99,000 debit. Interest on notes receivable 247.50 debit. Merchandise inventory December 31 200,000 debit. Prepaid insurance 41,850 debit. Prepaid rent 46,500 debit. Office supplies 19,900 debit. Office equipment 200,000 debit. Less accumulated depreciation office equipment 30,000. Stores equipment 250,000. Accumulated depreciation stores equipment 40,000 credit. Furniture and fixtures 100,000 debit. Accumulated depreciation furniture fixtures 15,000 credit. Delivery equipment 300,000 debit. Accumulated depreciation delivery equipment 50,000 credit. Accounts payable 200,000 credit. Notes payable 50,000 credit. Interest on notes payable 250 credit. Accrued electricity expenses 20,000 credit. Accrued water expenses 6,000 credit. Accrued telephone expenses 3,000 credit. Marsagna capital 1,351,800 credit. Marsagna personal 50,000 debit. Income summary loss 102,552.50. Total debits 1,800,050. Total credits 1,800,050. Adjusting journal 1. The allowance for bad debts should be increased to 10%. Bad debts account debtor 14,000. Allowance for bad debts credit 14,000. Allowance for bad debts 34,000 into 10% is equal to 34,000. 20,000 already available. So we have to increase the allowance for bad debts by 14,000. 2. The note from the customer is a 60-day 6% note 16/12/2000 A. Interest on notes receivable debit 247.50. Interest on notes receivable income 247.50. Interest on notes receivable 99,000 into 6% by 12 into half month 247.50. 3. The prepaid insurance is a 1-year fire insurance policy taken on October 1. Insurance expense debit 13,950. Prepaid insurance credit 13,950. Insurance expense is equal to 55,800 by 12 into 3, 13,950. 4. The prepaid rent is an advance payment for 4 months paid on December 1. Rent expense debit 15,500. Prepaid rent credit 15,500. Rent expense 62,000 by 4 into 1, 15,500. 5. Of the office supplies balance, only 19,900 remained on hand. Office supplies expense debit 40,000, office supplies credit 40,000, office supplies expense 15,900 minus 19,900 is equal to 40,000. 6. Properties and equipment are depreciated at 10% per annum. Depreciation delivery equipment 30,000, depreciation stores equipment 25,000, depreciation office equipment 20,000, depreciation furniture and fixtures 10,000, accumulated depreciation furniture and fixtures delivery equipment 30,000, accumulated depreciation stores equipment 25,000, accumulated depreciation office equipment 20,000, accumulated depreciation furniture and fixtures 10,000, accumulated depreciation delivery equipment 300,000 into 10% 30,000. Depreciation stores equipment 250,000 into 10% 25,000. Depreciation office equipment 200,000 into 10% 20,000. Depreciation furniture and fixtures 100,000 into 10% 10,000. 7. The note issued to a supplier is a 60-day 6% note dated 1st December. Interest on notes payable debit expense 250. Interest on notes payable liability 250. Interest on notes payable is equal to 50,000 into 6% by 12 into 1, 250. 8. Unpaid utilities for the month. Electricity 20,000, water 6,000, telephone 3,000. Electricity expenses debit 20,000, water expenses debit 6,000. Telephone expenses debit 3,000. Accrued electricity expense 20,000. Accrued water expense 6,000. Accrued telephone expense 3,000, being the utilities accrued for the month. 9. Unsold merchandise 200,000. Merchandise inventory asset 200,000 debit. Merchandise inventory trading 200,000 credit, being the merchandise unsold and in closing stock as on 31st December.
Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.